What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Facebook, ticker symbol FB, trading for $253 a share as of August 1st, 2020, equating to a market cap of $723 billion. And a PE or price per earnings ratio of 32. As we can see here, after reporting its Q2 2020 earnings, the company was easily able to set all-time highs. Let's take a look at Facebook's Q2 2020 earnings to see if we can extrapolate whether or not Facebook is still a buy. As you probably already concluded by the massive rally, Facebook absolutely crushed their Q2 2020 earnings. Let's quickly bust out the numbers. The company is up to 3.1 billion monthly active users. But what really blew our minds here at Quick Stocks is that the company reported that in June, 2.5 billion people use their services on a daily basis, and Facebook alone is up to 1.8 billion active users. That means a hefty majority of people inside of Facebook's ecosystem, including Facebook, Instagram, and WhatsApp, are using their service every single day. And of course, the more eyeballs equates to more advertisers. The company has 9 million active advertisers and 160 million businesses using Facebook tools. Facebook reported Q2 revenue was $18.7 billion, up 11%. Ad revenue was $18.3 billion, up 10%. Other revenue was $366 million, up 40%, primarily from their products including Oculus and Portal. Q2 expenses were $12.7 billion, up 4%, excluding the $2 billion expense related to the settlement with the FCC last fiscal year. Another juicy snippet for investors is the fact that Facebook repurchased another $1.4 billion in Class A common stock, and still ended the quarter with $58 billion in cash and investments. We also found it interesting that Facebook saw strong growth in US, Canada, Asia Pacific, and Europe. However, the rest of the world represented a decline of 6%, which was primarily blamed on foreign currency headwinds and logistics issues caused by quarantine restrictions. Anyways, let's take a look at some of the company's catalysts and philosophy. Perhaps the most important thing as a Facebook investor, remember, out of the company's $18.7 billion in total revenue, $18.3 billion was from ad revenue, which, considering the ad apocalypse 2.0 that Facebook is currently experiencing, where massive brands such as Starbucks are pulling their ads from Facebook, which sounds terrible for the company, right? Well, pump the brakes, boys. The company reported that the top 100 advertisers only represented 16% of the company's total ad revenue. Zuckerberg ain't troubled over y'all's nonsense.
And that's why I am often troubled by the calls to go after internet advertising.
But all jokes aside, obviously it's not great that large advertisers are pulling their ads from Facebook's platform, but it's certainly not going to be as detrimental for the company as many sources are reporting. And to be honest, most of these companies will be back, leading to our next point. The company offers personalized and relevant advertising. In layman's terms, selective advertising gives businesses a higher return on their advertising dollar. Why would you want to advertise to an audience who may be outside of a brand's target market? If you've ever used one of their services, you know that Facebook and Facebook-related services are creeping on you. Their AI is extremely advanced. Old-fashioned advertising, such as television, is no longer the optimal form of advertising, and this trend is only going to gain momentum. As long as Facebook can keep eyeballs on their services, they will remain a cash cow, milking advertisers' wallets. Facebook is also continuing to invest heavily into its gaming segments, which, if we are being honest, here at Quick Stocks we are not completely sold on Facebook gaming, but the company's ownership of Oculus, a leader in VR and augmented reality, is intriguing. After all, VR is going to change the gaming landscape. But that's for another video, as currently this makes up a fraction of a percent of the company's current revenue. The company has shown it can thrive with many of its employees working remotely, and stated they are aiming to have 50% of their employees work remotely 5 to 10 years from now. You may be thinking that this is for cost-saving measures, which after all is great, but it's just icing on the cake. The company stated its primary goal is not cost-saving, but access to a greater talent pool. Remember, these tech giants are fighting for the best and brightest minds, Not restricting their talent pool to people living in a specific area vastly opens up its candidates, and the cost saved on office space, and amenities, and electricity, etc. It's just a bonus. Bear with me, the last few things we want to note before giving our quick stock prediction is that the company noted they are seeing a sign of normalcy as shelter-in-place restrictions loosen, and they expect users to be flat or even slightly down in Q3 when compared to Q2 2020. They also reported that a new data center is in the works that will be run on 100% renewable energy. Finally, the company made it clear the role India will play in its future growth. Which, side note, if tensions between India and China remain, and, TikTok stays banned, this is actually great for Facebook. And if reports regarding TikTok being banned in the United States happens to play out, investors could catch yet another catalyst. So with all of this in mind, what's our move? Well, of course, an investor has to take into consideration the ad apocalypse and the government trying to intervene with these large tech companies. But really, at the end of the day, Facebook's story isn't that complex. And as an investor, the main question you need to ask yourself is, do you think Facebook, including WhatsApp, Insta, Facebook, and whatever future apps they release, are going to continue to gain momentum and attract eyes around the world? They already reported 3.1 billion monthly active users. Remember, there are 8 billion people on this planet. A billion of them are too young to use Facebook, and at least another 2 billion live in countries that won't have access to Facebook. Which, don't get it twisted, this still offers an absolutely insane amount of profit through its ad revenue segment. But as a long-term investor, a decade from now, one certainly could argue the company is going to have to continue its growth into other segments. Honestly though, from your reporter's perspective, Facebook is in for another great decade as more people move online and advertisers follow suit. And of course, we can't imagine them stopping their share buyback program or technological advances across the board. For this reason, we have a small position in Facebook of around $4,500. Which we'll be holding on to for the foreseeable future. Honestly, depending how the next stimulus plays out, I wouldn't be surprised to see share prices well above $400 relatively quickly. However, one should take into consideration that we are not a financial advisor. Your Quick Stocks report is for educational and entertainment uses only. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 1,040 subscribers and plan an early retirement. I will catch you guys in the next one.